Yo, what is happening, traders? Thomas here from VAGAFX. Today we are going to be looking at a setup that we took on Friday on the dollar yen, and we're going to be looking at a forecast of our watch list for the week ahead. Now, before we begin, guys, if you do want to keep updated with my latest content, please consider liking and subscribing, and follow me on my socials where I do upload to on a daily basis. Now, without any further ado, let's get straight into the video. So just at the first glance, guys, before we do actually go over the price action, this was one of the highest returning trades that I've taken this year. A lot of my students did get involved in this, and although I did put my analysis out in the Discord, a lot of my students did take this trade completely on their own analysis. So it just goes to show that we are obviously trading the same strategy, and you don't have to be relying on a mentor for signals. If you are using signals, you can obviously do trades like this yourself just by understanding swing structure. We are going to rewind price action back to a few swing ranges prior, just so we can obviously go through what our mindset and psychology was before the setup occurred, and why we did think or perceive of it as a high probability setup. So this was the price action that occurred on the Thursday. We can see that we've got a clear uptrend in market structure, guys. As normal, we are going to mark some significant structure points out, which we call swing structure. We can see that there is a swing here, swing here, swing here, swing here, and these are where order flow is changed in the market, guys. We call this major order flow, where you've got major highs being broken, then followed by major lows, and then these forms reversals, which do become swing points in the market, which we call major swings. So we can see that there's one by here that got broken clearly by here. We can also see that there was major lows being broken by here, major high. So this would have been a swing low. And we can see that there was another breakdown in structure by here as well. Only a 2 candle break by here, so we wouldn't actually class this as a major high, swing high, sorry, we would class this as a minor swing high, which I will mark here. But we know that the swing high has been broken, guys, so we know that the momentum is bullish, and we are going to obviously have a bullish bias just because the momentum is trending, but you will see what happened, which did sway our minds. So we're going to start playing the market. We actually zoom in here, guys. We can see that there was a counter trend candle pullback by here. We can see that this wick is higher than this wick. I'm going to just outline this with a line so you can see. And this broke upwards. This became a major low. We then get a break downwards. So this is confirmed as a new swing high, guys, which we will just mark out. We can follow the market back. We can see that this was the last swing low. So our momentum and bias is still bullish, guys. But what we get is very corrective price action here. We do get a break of this swing high, forming a new all-time high in the market. This is a very weak break, guys. We don't get any structure build up after this. And obviously, if you do understand liquidity, you'll know that there is liquidity building beneath here. So every low that is not getting swept, it's forming liquidity under. You can actually see that it's had very perfect taps on this trend line by here, and there is going to be liquidity building under each low by here. Some traders do mark out liquidity levels like this. I personally like to mark it out in a diagonal trend line, just because it keeps things nice and clean. Now, you can actually see by here that the volume is dissipating in the market. This is what we call spread hours or market rollover. The hour before and hour after market rollover, basically volume dries up and the market does become very noisy and liquid. So we've got not only liquidity builds up by here, we've got this very weak break of structure, which we're going to be waiting for this major low to be broken before we can mark our swing. Which we get by here. So we can mark our swing high out. We can follow the market back. We can see that we've got 2 structure points by here. We're going to mark this out as a swing low. We are obviously in the Asia session, guys, so structure breaks, especially swing structure breaks, can't be as probable as a structure break that occurs during a high volume period like the US or London Open. But we do get a strong structure break nonetheless, and we do get a high volume spike. Now this is at 1 o'clock in the morning, that's British summertime, but we are trading the dollar yen, guys. So even though this is during the Asia session, this is an Asian pair, we can see that there's a clear volume spike in the market. Now we've got a swing low broken by here. We can follow the market back. We can see that there was major lows being broken. We can also see that there was a major high broken by here. Again, just going to draw this across so you can see we do get a 2 candle push above. This becomes our new swing high. So we're now in a new swing range. There's no swing low that's formed yet. We do need a major high to be broken for that to happen. Some traders do count a structure like this. Personally, even though it's a bullish candle, we don't count this as a major high at all. We don't even classify this as a minor high. But we're going to wait now until London Open, simply because we don't trade Asia session and I wouldn't even be awake at this time. We get to the London Open. We do have a major high by here, and obviously if this breaks, we then get our swing low confirmed. You can see that the market hasn't broken through any major high by here, guys. So this is all part of the same swing range. Even though you'd call this a swing point, in our community we would be calling this a minor swing low. Once we get a break of a major high, like so, this becomes the swing low, or the lowest point becomes the swing low. Now what we've got, guys, is we've got a volume spike by here, a break of a swing low, nice momentum. We also have liquidity built up by here, which we call inducement. It's localized liquidity building for the market to sweep above. And we have a swing low point by here. We also have a wicked candle by here, just before the volume spike, which we're going to draw our supply zone from. And we had a previous weak break of a swing high in the prior swing range. So all of this, alongside the liquidity builds up by here that it did sweep into, indicates a shift in momentum, guys. From this bullish momentum, we get a weak break, liquidity builds up, sweep through that with a large volume spike, and then we get inducement, and we can look for a high probability setup. And again, like I said, we don't normally trade Asia sessions, guys, or trade from zones in Asia sessions, but it is an Asia pair, and we do get this clear volume spike. You wouldn't get spikes like this normally on the euro dollar, for example, or the dollar franc. So we're going to draw our order by here. Now personally, with this volume spike, I was happy to keep my stop loss on the zone. If you do want to be more or less risk tolerant, you can put your stop loss above, you can put your stop loss slightly above the swing high itself, because we know that the swing high is now likely protected, as we are now trading in line with order flow, or our perceived perception of order flow. And you do have this high volume zone, which the market is obviously less likely to sweep through due to the amount of unfulfilled orders left at this imbalance. Now, we did actually have some fundamentals coming in, guys, during this day. This was on a Friday, and you don't expect the market to move a great deal on the Friday. But we did have a Powell talk coming in. We did actually get a few spikes on the zone, guys, and I did actually call this zone out after we had a few rejections on the zone. I didn't actually have a limit order set. I actually didn't see this trade until the market was actually spiking into it. And I will actually show you my pre-analysis in the Discord community, just so you know. I did put this out before the setup occurred, but also I will show you my students' profits in a second. Now you can see that we do get a clear rejection here. and then we get some serious volume come in during the Powell talk. I did close this trade out. I didn't close out the swing low just because of the heavy volume. I did keep my position open. We did close manually around 14R by here, which I'll show you the profits to in a second. So here's the trade that I put out on the Discord, guys. Like I said, I did catch this one late, and I put this analysis out after the zone had already rejected. We see that we put this out at 1:03. If we go back to the chart on the 1 minute time frame, we can see that the market did come back up to mitigate the zone further times. And you will find that these swing zones do mitigate multiple times. I do actually tell my students that they can actually wait for a wick mitigation before actually placing their order. It can actually sometimes increase the probability as you are entering after the market is already rejected, confirming that there are unfulfilled orders there rejecting the market. If we go back to the Discord, we can see my close profits at 9,999. We can see that there was a hefty commission on this trade. And that, like I said, is 14R. It's one of the highest returning trades that I did actually get into this year. If you did want to see highlights of my trades as well as my students' profits, you can simply go onto my Instagram profile, press on one of these tabs by here, and up will come my highlights. So this is a markup posted by one of the students. We also have another student showing their profits by here of the same zone. We do also have free community members. So this person isn't even in the premium community. They did get involved in the exact same setup. So just a quick glance at what we're currently looking at on the euro dollar, guys. And we can see that we've had this very large push. This was just had an alert there for my chart. The market is starting to head down to our key levels. We had a major push by here. This is a fundamental news candle, guys, and we can, or you will find that these zones do sometimes get swept. Obviously, there's a massive amount of volume that's occurred in the market. This did happen on the Friday. We are going to observe this zone. I'm not placing any limit orders just yet. We will actually observe this zone and see if we do get some rejections. We do have a very strong push, but these zones can be volume that is simply put into the market simply to sweep liquidity, and the unfulfilled orders there, especially if it's happened last week. Obviously, fundamentals do change over the weekends. You'll find that sometimes these zones tend to actually spike or just ignore completely. We did get a swing point produced by here. We did get a rejection on that. We had a false break. This indicates a potential shifting of momentum, guys, or continuation of momentum to the upside. You have a clear rejection of this swing point, indicating that the market may want to head higher. We also have this swing high by here, and we had a rejection from it, creating equal highs. That has now been swept. Now, whether this is going to indicate a complete reversal of momentum to the downside, we do not know. We did have some inducement by here. This could just indicate that the market wants to simply come lower before continuing on order flow. I suspect there is still more liquidity here. If you do actually go onto a higher time frame, we can see that this is a very impulsive movement to the downside, and this region of price action is very corrective to the upside. And we know, obviously, there will be liquidity building up below each and every one of these unswept significant structure points. The market is still bullish, guys, at least on this internal price action. I will be looking at a setup to the upside. If we do get a break to the downside through this swing low, we do have a very strong volume point by here. If we do get something like this, I will 100% be looking for a setup from this zone by here. This is the last counter trend candle before imbalance. We do have a small inducement point by here. I will be looking to go short from this region. But for now, we are looking for a long setup by here, just because we've had this swept liquidity and this nice push up during London Open. We have now got a reversal at the US Open. So I will be looking to trade from both of these zones depending on how price action performs, guys. Now this is the dollar Swiss franc, and we do have this bearish momentum to the downside again. Liquidity building all above here, although that doesn't have to be swept majorly, if at all. We do have a sweep upwards into taking out some of this localized liquidity. We do get a London open supply zone here. So I am going to be looking at a trade from the to the downside by here, guys. Although I won't be placing a limit order on this just because the volume isn't massively high. We didn't get much of a spike in volume during London open on this pair. The volume is still low on average, albeit it is still a Monday, so that is understandable. But I will be watching for rejections on this zone as well. So that is it from me, guys. If you do want to stay updated, please consider liking and subscribing. I do intend to start uploading a lot more. I know I do say that on every video. I am going to be getting laser eye surgery within the next few weeks. I do have pretty poor eyesight. I'm short-sighted, so I don't know if that is going to cause me to be blind temporarily. So I may not be able to give markups in a few weeks' time. But I am planning on uploading at least twice a week in the near future, and I do upload on my socials every day if you do want to keep updated on my forecast, my breakdowns, and the trades that I've taken. Now I'll catch you guys in the next video. Peace out.